Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slide show for Monday, December 17th. Today I am back with my check of the broad market indices. If you were reading the blog on Friday, you saw that I didn't have a chance to get a chart slideshow put together, so I said I would record one today. Today was slipping past me, so I finally, right at the market close, figured I'd grab these charts and kind of get this going. Basically, where we sat a week ago Friday is here. We were bouncing off the lows right there. We'd rallied above short-term resistance. We'd pushed above the 50-day moving average. And I was talking about this overall trading range, highlighting this is the next upside level to watch. When we turn to this week's charts, we see that this area was not in danger of being violated. We had a little bit of chop above the 50-day moving average right in here, and then we pushed right back down. I had mentioned the zone near 1480 is we've seen it act as support and resistance, and said that would be expected to act as near-term support. The market just completely just pushed right through it, didn't even pay attention to it. So I was wrong on that aspect of it. Alright, so clearing off the charts, what do we have here? Basically, that overall trading range, we're definitely still in that. We've got the upper boundary here, the lower boundary here. What we have seen is sort of the range contract a little bit. This low was above that low there. This little peak here was below this little peak here, kind of bringing the range in a little bit. I don't know if that's all too significant. We are hitting the point, where some people may be sort of pulling back. Some on the street, sort of waiting for year end to pass, sort of lock in their year and be done with it. So to see the range kind of contract a little bit, I can't say I would have expected to see that, but it doesn't seem too surprising. But basically, this upper and this lower boundary, those are still the major areas I'm keeping in mind. When you look at the Dow, same thing, highs and lows there. We're kind of stuck right in the middle of that. Comp, lows, highs, middle. The main difference here is the rut. We talked about down to the lows, up to the highs, down to the lows. This most recent bounce actually came right up and kissed the 50-day moving average, which is kind of rolled over on its own, and now we're back to the lows. So I think that's what I might be keeping an eye on this week. It's just how these lows act. If we do see a breakdown here, that might be something to keep an eye on. Basically, if we start seeing the small cap market start to break down, maybe that's a sign that the large caps are going to follow. It's too early to make that prediction yet, but that's what I'm keeping an eye on here in the coming week, how the rut behaves at this low here. And if we do see a breakdown here, that would be a potential warning sign to keep in mind. But anyway, that hasn't happened yet, and as we've all seen, this market can be extremely whipsaw-ish. So that's what I'll be watching, and we'll see how it plays out. Volume should start to dry up at the end of this week, and next week with the market being closed for the holiday, I wouldn't expect a whole lot there either. So anyway, I don't want to say we're on autopilot for the next 2 weeks, but volume is going to start to dry up, so keep that in mind. So anyway, keep an eye on the rut this week, and hopefully I'll be back on Friday with an update.